What's up, folks? It's Eric. It is November the 4th, and today I'm just looking at potential strategy. So when I came on the other day, I looked at making these entry signals. So here, and I think we're actually looking at NVIDIA, but I made these entry signals, and I sat down with the chart today, and I pulled this up on Microsoft as well. So I do want to just see how it looks on the other. See how it looks on the other tech charts, but then I want to see how it looks converting this into a strategy. See what the potential risk to reward might look like, or overall profit curve might look like. I'm trying to make sure that everything is up and running, and there we go. All right, so. Yeah, I'll have to apologize. Last time I was on, I had a lot of dead air, and that wasn't intentional. But I want to try to do better this time. I want to try to do better. Okay. All right. So, got a lot of noise going on in the background. You know, it's life, man. You know, whatever. Let it ride. Let it ride. It's here. Let it go. All right. So let's get rid of this. And I've got my music on in here, so wow, they're having a good time. Get rid of those. All right, so the this is the indicator that I put together the last time, 1 minute on NVIDIA. I did it on 11.3. So if I get rid of that, you see it gets rid of those blue dots. I'm gonna bring it back. So now we have these blue dots, boom, and let's see if we move forward. There's the entry. There's some entries. There's some entries. There's some entries. Look at those. I mean, a lot of these entries are like right here at these lows, at the lowest of the dips. So this area right here didn't turn out too well. This one here, I would say that probably didn't turn out too well either. So again, I could be adjusting the script to take those out, or I could just go ahead and see what it looks like with it, and then they just get stopped out. And then we move on to a new script. Okay, so, but again, I made this for NVIDIA, so let's see what it looks like on NVIDIA. I think it looks a lot better. I want to actually get rid of that background noise there. See if we can do that. Alright, back. Alright, so there's NVIDIA. Boom, boom, boom. Alright, so like I said, it's been a while since I've been messing with strategies, but I'm going to get back to it. Strategy. Put that back in there. Strategy. Going to start a new one. Here. We'll call it 11.3. So one minute. NVIDIA 11.3, 23, strategy template, yep. Alright, so now we need to go to the 1 minute show me, which is here for NVIDIA. We're going to take all this, all these conditions here, this logic here, we're going to take this and we're going to move it over to, the strategy. Let's see, we'll take this. I didn't use anything with the swings. Copy that. Can I do that? Why do I feel like I'm missing something? Condition two. Let's do this. So I define all these conditions here, but I just need to make sure that I say if all conditions here. So I need to copy that and then bring that over. So if all these conditions, paste that. I don't need this show one. If condition 1 and 2 is up to 9. Verify that. Okay. Man, it's been a long time since I did a strategy, so let's see what it looks like. Strategy? 1 minute. NVIDIA, and this was 11.3. Just want to see what it looks like here before I go to optimize it. Again, optimizing is just a process of finding out what the best kind of risk reward, entry, take profit levels are. Alright, so that strategy would have bought here, but then it would have been looking to exit at some point, which was not here because otherwise it would have exited already. So there's a buy there, but I needed to make a lot more transactions than this. So if we zoom in on this area, trying to figure out what our risk to reward needs to be. There's two potential entries here. So it could have entered here and then you exit somewhere up here, or it could have entered here at this bottom bar and exit somewhere up here. Since this bar came first, it will probably be entering on this close. You know what? I think the way it's set up, and like I said, it's been a while since I messed with this, but if I'm not mistaken, you can only get in on the close, on the open of the following bar. So if this bar gives you an entry signal, you can only get in on the open of the following bar, which is one of the reasons why I typically move to like the to a lower time frame, because if I wanted to get in somewhere in here or somewhere down here, I need to be using different candles. So I might reference the 1 minute candle, but then actually enter on like a 15-second candle, which will allow me to enter down here or something like that. All right, but anyways, so we'd be entering right here because we have this bar. So really we want to get rid of the entry on this bar, have the entry firing on this bar, which would make us the entry criteria would have been met on this bar, and so the entry would have been at the open of this bar. That's what we really needed. But let's just see what it looks like with this. Let's find out what the risk to reward needs to be. So typically if we were to get in down here, let's just say like bottom third of the bar, from there to there is about what, 0.10%, and then if you go from there up, let's just go up to this kind of lateral movement up here, 0.1 to 0.2, we'll call it 1 to 2. Stop loss of 0.1, take profit of 0.2. Verify that again. Now with that verified, we should have had some exits out of that strategy, unless it just didn't update because it was already on there. Strategies, yeah, it didn't. So stop loss, stop loss 0.1, take profit 0.2. We're gonna go ahead and optimize this. So start. We're gonna go up to 0.25. So pretty much what we're doing is optimizing. So we're checking stop loss percentages from 0.1 is where we said that we probably should be at, but we're going to check from like a minimum of 0.05 and then a maximum of 0.25. So that's what that's saying. All right, and then so the take profit would be 0.2. So to optimize, we're checking take profits from 0.1 to 0.3, and we're going by increments of 0.02. Hit optimize, hit OK, optimize. And so this is going through the process of actually taking all the entries, taking all the exits, entries and exits, entries and exits, and seeing what's the smoothest, best profit line out of all those potential entries and exits. And you see we have a number of entries and exits here. All right. Instead of looking at all these individually, because it actually goes back, what, 10 days? Instead of looking at that, we're just going to tap this button, the performance report, see what that curve looks like. All right, so that equity curve looks pretty good, actually. I mean, I don't like this area in here, but again, you have to pay to play, right? So you can't expect to have straight moves all the way up. Hang on. Alright, yeah, so that's what we have there. So now we need to find out how we can minimize this drawdown here, because that's a pretty significant drawdown. I mean, we have nice moves up, but that's a pretty significant drawdown, if I may say so myself. So that is, what's the date? 1025, 1025, 1025, 1026, 1027, 1025 through 1026. Let's get this out of here. And then see what's happening through 1025 through 1026. $10.25 through 10.26. Looks wild. Lots of losses through there. All right, so what I want to see now is I'm just going to look 10.25 through 10.26 on a large time frame. See if we can find out what was actually happening there. Was it downtrend or? And how come the 5-minute time frame? 5-minute time frame doesn't go down that low. Let's do this. Let's bring the other desktop over so we don't have to keep messing with that one. Or I could have used a different workspace. Yeah, let's do that. Let's just use. Let's do this. Video. Which one? So I'm operating here. So this is this bottom right one over here is what I typically use for my larger time frame buys. So 15-minute time frame is fine. It needs to go back at least that 10 days. We'll go back 15 days there so we can see what's going on. So 1025 through 1026 is right in here, and that is all moving down. All right, let's see what it looks like on a 5-minute time frame. All right, and all these lines here, these are my descending trend lines that just automatically created by one of the other scripts that I made. So typically you don't want, I found that you don't really want to take a trade on a long until the price has gotten over top of one of these descending trend lines, right? And it's worked pretty well on all these, right? So at least on the 5-minute time frame, as the price has gotten over this, what it did, I mean, it crossed it, a little jump up, right? So that was cool. Crossed it, and when it crossed it, pretty big jump up. When it crossed it here, nice move up. Don't like this one here. That was pretty volatile. It retraced pretty quickly. Of course, again, everything's not going to be 100%. Don't expect for it to be 100% every time. And then that's where your risk mitigation comes in at 1025, 1026. It's coming down fairly aggressively. The price is under VWAP. Under VWAP. Let's see. Maybe I'll make. I was talking with somebody the other day. NASCAR All Out. He was on here. We were talking about, or maybe we were in the Discord. We were talking about VWAP. So taking trades over VWAP versus under VWAP. So I'm betting that a lot of these trades are happening over VWAP. Let's see. Maybe that's what I do with my. Tell you what. Let's do this. Let's try. Price has got to be over VWAP. So open is over VWAP, and I think I have a VWAP H. Yeah. Okay, so now let's go back. See what this looks like. Which just means that for the most part that the price is not under the volume weighted average price. Alright, so now we're back on this chart. So no, but we're on the 1 minute time frame, not the 5 minute time frame. Change it to the 1 minute time frame. Instead of having 5 trades here, now we have. Okay, that looks better. I think that the profit is a little bit less, but the curve is much better. So this might be something that you could actually trade. I want to try one more thing. I want to try to optimize it one more time. Now that we have changed the code, we're going to try re-optimizing it. So I think those initial values were 0.10 and 0.20. 0.20. Come on, what you doing, man? All right. Optimize. 0.10, we went from 0.05 at the lowest, 0.10, 0.25. We'll go by 0.02 increments, that's fine. Oh, that's the wrong one. Optimize 0.05, 0.25. Go by 0.01. This one here, take profit should have been 0.20 was the target, so we'll go up as far as 0.35. 0.20 will start at 0.15. Go by 0.02. Okay, optimize. All right, that was pretty quick. So I don't think there was a lot of trades to be had. Okay, all right, so it's done already. Let's see what the strategy performance report shows. Okay, that is even better. Okay, so that's better. That's good. And I think before it stopped off at like 1100 or something like that. So now it's up to 1500. 1500. That is over how many days? 1023 to 11/3, so approximately 10 days. And what are the settings? The settings, 100,000. No, slippage. No, initial capital should have been 100,000. Let's see what the settings are for my strategies. Properties for all. Typically, the way I do it, the way I set this up, is to be more realistic to what I might actually trade. So I think I put like maybe $30,000, and then maximum shares. That can be fine. Fixed shares. Instead of fixing the shares, I put trades. So you know, and not saying it's the best way to trade. It's probably not. I don't know anything, but like when I was trading, when I was doing good, when I was convinced and confident about what I was doing, I put on just about everything at one time. But now I would get out when I should have got out. So I was executing my stop losses fairly well. So $25,000 on per trade, round down to the nearest one. Minimum shares 1. All right, initial capital 30,000 per trade, commission. Maximum number of bar service. All right, hope I don't have to change any of that. And now, so we're going to look at to see what we could actually make with this. Looking back over the past 10 days, but if you wanted to actually automate this so that this trades using your real money, you'd hit this, and then you hit this, and then you hit I agree, and then after you hit I agree on there, you turn confirmation off, and then you hit I agree again, and then it would actually take the trades for you. So we don't have that on right now. This is not doing trading hours anyway. This is Saturday. Close. All right, so that should have changed. should have changed this, right? So changed it to 30,000. I think typically in the past it would have for initial capital would have 30,000 here instead of slippage. So not really sure why it's doing that, but if we go back to performance graph, it should be the same. That's the same, but we'll go to performance summary. This will show us, so the total net profit would be about $800, which making $800 in 11 days, that's not like your dream day trading returns. You want to make like $800 in one day, not over 10 days. So, but anyway, annual rate of return 84%. I'm just curious if we were to run this back over instead of 10 days. If we run this back like say 100 days, does this have an average daily return? I wonder if this had. I can't show it now. All right, it's gonna take a while for 100 days worth of data to pull up. So let's see. Well, I also have 2 data streams on there too. Bada bing, bada boom, bada bing, bada boom, bada boom, bada boom. Well, while that goes, there we go. It's done. Let's see if this is going to be good or bad. It could be bad. It's not great, right? Because 10 days out, we made, what was it? $1,100? I forget what it was. Now, 100 days out, and we have not made that much more. We have, yeah. So let's see what the equity curve looks like. Really good after August. No, I mean really good after, yeah, August 21st. From August 21st down to here, great looking curve. But this, what happened right in here? What happened from August 7th through August 18th? What in the world happened? August 1st through 17th. Let's go back 100 days. Let's see what happened during those days. August 1st. Just a huge downtrend, huh? Alright, so the price does spend a lot of time under the 200 EMA on the 5-minute time frame. So let's do this. And we're gonna lose some more trades. This is the unfortunate part about scripting and that kind of thing, which is the same thing with trading in general, is that you got to look at multiple things at one time. Beauty about the algorithms is that it can do it with calculations. You have to kind of do it yourself. But as we implement this, we're going to lose more trades. We're going to lose bad trades, but we're also going to lose some good trades. So we're going to say that the price has to be above the 200 period moving average of the 5-minute time frame. So the open of the open is greater than open of data 2. No. Open is greater than 200 period moving average of data 2. Okay. Now, I'm going to go back here and make sure that on here the 2 minute data 2 is a 5 minute time frame, so it's not the same time frame. Okay. Now with that being said, move this back over. Those strategies, not true. Did have strategies on here. How did it get turned off? Okay. Try to reference more back. Try to reference back more bars than allowed by the current max bar setting. Okay, here's where we get into the trickery. The max bars back setting, and like I said, I haven't done a lot with the strategies in a while, and so I do know that there's going to be something that's got to be adjusted for the max bars back. Because I adjusted the data 2 time frame. So data 2 is a 5 minute time frame. That's the 1 minute time frame. Max bars back. Let's do this. Let's go to edit studies. Change this. Status, customize. Instead of referencing 50 bars back. Oh, because now as part of our strategy we're also looking at the 200 period moving average. Now the strategy needs to be able to use at least 200 bars instead of 50 bars, because the strategies that we were using before didn't really need that many bars to execute and to calculate. But now, because we're using a 200 bar moving average, we need at least 200 bars on the left side of the screen before we can start our calculations. So this needs to be at least 200. We'll put 201, and that should do it. Status, turn back on. There we go. All right, so remember I told you that we were going to lose a lot of trades. We lost a lot of trades, but this equity curve looks a lot better. It looks a lot better on that 100-day chart. So again, this chart is going back 100 days. What? How do we get back to 5 days? Okay, all right. So we are at least referencing the 200 period moving average. Somehow we got back to 5 days. Let's change this. We're going to move this back to 200 days. No. 200 days, 100 days. And hopefully, if we put some decent logic in there, we still have a higher number of trades here, but our curve will still move straight up. So let's give it some time to see how long it takes for it to calculate and see if it moves straight up. Music going, you know what I'm saying? I'm sure it's a lot of transactions. There's a lot of data is pulling up. Mythical. Oh, there we go. Ew. That's That's terrible looking. That is terrible looking. How do we get, okay, so this is still from August 21st. I mean, I think we got rid of a bunch in there, but now it's just kind of looking raggedy. $6.15. All the way up to August. And it may be, okay, so I know part of what's going on. Part of what's going on is because I hadn't re-optimized it to include all these. When I did the optimization before, I did it based on like a week or 2 weeks, you know, the past 10 days. So in the past 10 days, you have a certain amount of volatility. And so the optimization report optimizes great based on that amount of volatility. If you go back a month, there may have been less volatility. So you really need to have different levels of stop loss and take profit based on that lesser volatility. And then maybe 4 months ago, you know, we ran this back 100 days. So say that 3 months ago, it may have been either even less volatility or maybe even more volatility. But either way, that optimization rate, the entry and the exit, really changes. And so if you don't re-optimize, then those numbers don't work. And that's the beauty about trading, is that every day changes. Different time periods throughout the day, pre-market, opening, midday, close, every time period has its own characteristics. So you really want to figure out how you trade in this season, how you trade in this market, how you trade during this time period, how you trade a long versus a short. So being very specific, and this doesn't allow me to do that as well. So I need to be a little bit more creative, instead of just like plugging in this optimization and sitting back on my heels and saying, you know what, let me just run it and see how it does. Because I could, and this is what I was talking about earlier, I could come up with another piece of logic, or another, it may be complex, but I could come up with something else that as the market changes, whether or not it's the range that the SPY opens and closes, whatever it is, it will alter your entry and exits for that week, that day, whatever. If I added that to my algorithms, I'd be on to something. But let's just see what it would look like if we optimize based on 100 days instead of optimizing only on that 10 days and trying to apply it to the past 100 days, because that's a no-no. All right, so and now that I'm going to be running this back across so many hundreds, maybe thousands of potential entries, I really don't want to, I don't know, it's just going to take a lot. The farther I have this start from the stop and the smaller the increments, the longer this thing is going to take. I have done, like running back 30 days or 100 days, and there's just so many entries. Maybe I'm running on a 15-second time frame. There's just so many entries that, this thing is like, it's going to take an hour. And you're like, what? So let's see what it says. And then I like to look at the net profit as it's running to see if that net profit is going up. 1,500. It's not a lot compared to the fact that when we initially ran this script, when we went back just I think 10 days, it made $1,100. I was done already, but this will be good. This will be bad. This will be very bad. Now you know what I'm saying? Some medication. Alright, so it's not saying that it's, well, typically, like I say, it'll give you the amount of time. Oh, there we go. Alright. Let's pull this back up. Performance report. Okay. I mean, better. This is really nice. This is still a bit raggedy as far as I'm concerned. But I wonder how much of this. Okay. Yeah. I mean, it just is what it is. It is what it is. Like I said, without adjusting the being able to have like a self-learning entry and exit, it's just gonna do that. There's my support and demand levels without a live jacket. Like this. I mean, why are we taking trades through any of this? I mean, I get it. Take the little pullbacks, but alright, and this is somewhere where I'd say, okay, well, we should only get in if the price, if we're above. See, this got stopped out. There's no way this should get stopped out, right? I mean, this is a great move. Can you enter above the y-intercept and below the 9-period moving average? Below the 9-period moving average. And or below us, could it be above the swing low? Above a swing low. I think that's fair. I think it's fair to say that you should enter above a swing low. So let's see what that looks like. So now I'm just going and I'm really just adjusting this thing. Alright, so swing low, one, swing low. I'll call that 10. Swing low length plus 1. Swing low length 10. swing L, value 3. Okay, if swing low is greater than 0, then value 3 equals swing low, else value 3 equals value 3 of a bar to go. Alright, and so we're going to say that open is greater than value 3. Boom. Alright, let's go back and add this back, see what it looks like. This still shouldn't be firing off because this swing low here, no, maybe it didn't, maybe it's not effectively a swing low, because this should fire as like a swing low, and then well, the open is above the swing low. We need to say that the low is above the swing low, and then we'll lose that one. Low. Alright, right, see, we lost that. We still have that one. That's not cool. We don't want that one. This should be a swing low, and this low is above, but also, well, and you can see this is a potential level of support. It just as it's coming back down, boom, it touches it again, so you want to take that entry. Yeah, but I'm gonna say that the volume has to be lower than the 50 period moving average as well. Alright, so volume is less than the, oh, I said the volume is over here. I said the volume is greater than the volume 6. I want to say I want the volume to be less than the volume 50. That's just because I changed my mind. So I'm not looking for that initial touch. I'm looking for the confirmation move up. All right, I don't even know what I have now. Now it's just getting convoluted. We're getting a lot of stuff into the mix. So let's add all this. Place. I think I pasted over, yeah, my stop loss, my inputs. Okay. Alright, I double defined that. Okay, so now we're good. Let's go back and see if we can optimize. Let's go 0.6. I don't know. Where you from, where your grandmama stay, huh, ma? It's Man City, I run my. All right, try that. Oh man, we're already I want to say we're already moving up that net profit chart, but we kind of halted. So 1700. Not that good, not that good. So again, I'm just kind of doing my homework for November the 4th. Just working on my craft. Working on my craft. All right, there we go. I feel like. Okay. All right. Whatever I did was not cool. That's why I say I kind of have started messing with that initial strategy that I had, and it's not looking great. But I think my idea was that I should only be taking trades where a new swing low was met. That's what I need to look at, where the bar is over the swing low. Yeah, I'm doing too many things here, and I think we were talking about that earlier. Is about trying to find one thing that you want to trade and trade that one thing. I could certainly have if I could do this one thing well, and it might only make 1,500, but then have another one thing that it targets well, and then that make another 1,500. Then have another thing that it targets well, and that make another 1,500. Then have another thing. That would be a lot better than trying to capture everything at once, and that ain't happening. So I need to just scrap this, or at least go back to what it was before, and then go back to the drawing board and pick the one thing, and be okay with that little measly 1,500, and then just put 2 and 3 and 4 different strategies together and make $1 on this specific entry, make $1 on that specific entry, make $1 on that specific. Sounds like a lot of work? Yeah, I'm sure it is. But when you get that down to a T, and then you can make that money consistently, then it'll be worth it. It'll be worth it. How many times do you want to swing a hammer building a house? You know what I'm saying? But once you're done, you got a great creation. You got something solid. But if you just swinging your hammer all around, you just put holes in sheetrock. And so I need to be hitting those nail heads. I know. I like analogies. Okay. So I'm about to leave this alone. I'll come back to it later. And hopefully I didn't lose too many people in those analogies and whatnot. So this is the swing lows that I have. I mean, I think that's fair, right? If you want to take this, you can take this because it's over the low. This is over the low. You can take any one of these. Yeah, but I don't like that. Let's see. Swing low. Let's make that 7. And like I said, I think this is where having something that's kind of self-learning helps. 7, 7, 7. Ooh. Let me see if the I was gonna say, what if we take an entry if the 200 period moving average is moving up and the low dips down past the swing low, then take that entry. But I don't think that's good. I don't think, because like I said, this 200 period moving average is moving up. That means that you have the strength and possibly momentum going behind it. And then if you take a dip down to the swing low, then take that entry. I don't like that. I don't see it working right here. It didn't even work right here. It looked like it worked right here, and it didn't work right here because this is a swing low and this is coming down to the dip. So I don't like that. Slope. I wonder. Because I think we looked back the other day and we saw that I'm looking for these yellow marks here. So these yellow marks here, I'm looking for those. I think we saw that when we have those, we have decent potential entry. This one is no good. That's also pre-market though, so pre-market. Nah, that one's not good. I mean, there's a little bump up, but that's not significant enough. The one thing, yeah, I've got to spend more time with just finding one strategy that works well across the chart for that one thing, and then, like I said, apply that throughout. Oh, that's not this. Gross profit, net profit, out. 1700 is not good enough. This curve is not good enough. All right, anybody got any ideas out there? Come on, somebody give me an idea. Like I said, without scrapping this whole strategy, which, I mean, kind of almost have to do at this point just because it's lost in the sauce. All right, let's see. And then another thing that I'll typically do is I'll copy this, then I'll go into a new chart, boom, and well, I don't need 100 days on here. I certainly don't need the strategies. But what I'll do is I'll put like a 1 minute time frame on the top, 5 minute time frame on the bottom, and then I'll just kind of go and look and see how the moving averages and other indicators change as we go from price level or from price area to price area. Yeah, so I have another process running on the computer right now, and that with trying to suck all this data out, 100 days, 2 data streams. Let me see, can I boost the power on this thing? Power plan, choose power consumption. Balance. Let's move to best performance. Boom. Okay. As soon as we change that, it shows up, of course. Yeah, give us some performance there. All right, let's change this to 10 days. Okay. All right, we're gonna copy this, paste this, and then one of these can be 5-minute time frame. Neither one of them has to have the active trade turned on. Neither one of them needs the studies on right now. Come on! Come on! What are you doing? Yeah, I think my computer has given up for the night. Come on, you can do it. You can do it. You can do it, baby. You can do it. Dun, 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 dun. Ooh. Ooh. Okay. How many days? Still 100 days? I told you to do 10 days. Tell you what, boy, there is a lot of data for NVIDIA. I'll pull up 10 days on some other stocks, and I mean, it just comes up kind of quick. But, all right. So then I can do global position on this, and then as I go across this chart, it syncs with that chart. So I'm gonna move this to the 5-minute time frame. Enter. So if I want to see what's happening right in here, but on the 1-minute time frame, as I click on this, the 1-minute time frame is over here, and then the 5-minute time frame is here. So I can see exactly what's happening. And so if I want to make a strategy that gets me in on the 5-minute time frame, the 200 EMA bounce, but it's also doing something specific on the 1-minute time frame, then I can see what's happening on the 1-minute time frame as well. And then as I'm putting that into my code, I can see it all at one time. But I'm not exactly sure what I want it to say, so I think I want to do something with this 200 slope down here. And so if on the 5-minute time frame the slope gets down to a low and it starts cresting back over, or at least we have a cross here. So the slow, the 10 period is crossing over the 30 period, the fast crossing over the slow here. What's happening over here? So where are we at? What's happening on the 1-minute time frame? 1-minute time frame, it touched and bounced. Aha! So that's one thing that I do see on 1-minute time frame when like this fast slope here, it just stays right above it, or it'll come and touch and go up instead of crossing under. Like when I say cross under here, it's getting into a little bit of trouble. But definitely when it crosses under on the larger time frame, that's trouble. So let's see, when it crosses under here, what happened on the 5-minute time frame? On 5-minute time frame, it's actually crossing over at that point. And so this move here This whole move here, this whole move up is this guy here. And so this whole move up here that we're talking about, this black line is over top of the red line the entire time, right? But when we look at the 1 minute time frame, what's happening? It kind of goes under it a few times, and then it does go over it and stays over it. So maybe that's when I want to enter. Maybe I want to enter when that's just one potential strategy, right? So when this black line is over the red line on both the 5 minute time frame and the 1 minute time frame, then you find your dips. Then you find your entries under the 9 EMA or under the 15 EMA. We'll say if the low drops below the 15 EMA. So let's see what that looks like. I'm just curious. Put that together real quick. And then this last one I'm gonna do tonight. All right, so one. I don't know if I can use and sound or not. 1 minute, 5 minute tech slope pullback. Okay, let me do it. I didn't want to do that as a strategy right now. I want to do that as a show me. So we'll call it the same thing because that's what I'll end up doing. So I did take that, took that ampersand sign out. Okay. All right, so value 1 will be, no, we'll go to here. Value 2 will be linear regression of the slope of SA200. I'm gonna have to do multiple of these, I can see that. SA200, slope. This will be 10. So we're just gonna repeat that like 4 times. SA200, this will be 10, that'll be 10, this will be 30, this will be 10, that'll be 30. This is SA200 of, alright, so that's data 1, so we don't need to put anything. This is be data 1, this will be of data 2. SA200 of data 2. Data 2 will be referenced to the 5 minute time frame. This one regular right here will be referenced to the 1 minute time frame. So we're going to say that so again the 10 is the slow, the 30 is the fast. So the 10 is the black, the red is the 30. All right, so we're going to say that the value 2 is greater than value 3. And then we also have to say that value 4 is greater than value 5. All right, and then so what we're going to do is we're going to say that the low is less than the 15 period moving average, and we want that to fire. We want that to light up as blue. Okay, so verify. Shouldn't have any issues. Okay, so now we're going to come back. This is our untitled workspace. I think we've been working on CLLS. That's where I was doing NVIDIA. Nope, this one. Let's get rid of some of these because I think it's actually slowing. I think it's slowing down my computer. It's trying to close some of this stuff. My computer is should be done with all the processes I had going on. But it's acting like I'm pulling a lot of data still. All right, come on, one at a time. Okay, so we were on this one, and now we will apply the new strategy that we just put together. We're going to get rid of, we're going to turn that one off. Come back here, add, show me, be the 1 minute, 1 minute, 5 minute. Text, so pull back. All right, we also need to get rid of the studies. I mean the strategy that was on it. That's where we have all those potential entries. Man, maybe it's because I have my phone plugged up. This thing is being slow. Wow. And then this is a whole thing right here. I haven't gotten this before. Okay, there we go. All right. Okay, so with the with that little strategy I just put on, or that code I just put on. Okay, so it's still 100 days. Oh, that's because this is one that I was doing with the strategy. Okay, so 10 days. This is where the green dots are where I would have my entries using that little bit of code I just put in. And I'm not loving that. I'm getting some high spots here. Let's do this. Let's go here, and we're gonna put it here. Oh, I have strategies on both. I've got a lot of studies running on these things. All right, 1 minute. I think it's going to kick back at me because it's going to tell me I need to add a data stream. So 10 days, 5 minute. 5 minute will be in the background, right axis. Subgraph. Gotta put a subgraph. 1 style. It's gonna be transparent. Get rid of that last strategy that we had there. And over here, we can get rid of that indicator as well. And this also only needs to be 10 days. Oh, 5 days here. Okay. Alright, so we see what's happening right here. So we want to see what's happening on the 5-minute time frame as we're looking here. As we're looking in here, what's happening on the 5-minute time frame. And why do we have so many entries here when we really need less? So do we want the lows to be less than the 9-minute time period, 15, 25? Let's say the open has to be lower than the 15 period moving average. So open less than the 25. Okay, so we get less there. All right, what else is happening? What happened here? I'm looking over at the 5-minute time frame as I'm clicking on this and just seeing where it's putting the dot. Because over here, okay. I mean, some of these actually look pretty good. It looks like you have to play with the stop loss, but those actually look pretty good. Those don't. Those right there don't. So what's happening here on the 5-minute time frame? Why does that look good? On the 5-minute time frame, on the 5-minute time frame, on the 5-minute time frame, we're in here, and the price is crossing under the 9-period moving average on the 5-minute time frame. What does that mean for these other ones that did work? Over here where it did work, I mean, it's close to the 9-period moving average. What happened over here? Over here, the price is above the 9-period moving average. Right here, it's kind of above the 9-period moving average. So let's say that the open, I've tried this before and I don't know that it worked out well. Or maybe I had to do open up the data 2. That's what it was. No, I think I tried that. Open of data 2 is got to be greater than 9-period moving average of data 2. Try that. I feel like it gave me mixed results though. Okay, so I still have that little high place right there. Is that right? Yeah, because we're in this area here. But what time is that? Oh, that's pre-market, so we don't want to take that. We don't want pre-market, so we want to say that the time is after, so it's greater than, let's just say 10 o'clock. So we ought to lose that. Okay. Because I'm not using this trade pre-market. Those look okay. Those two look okay. Those are, that's after hours. We'll get rid of that. Those Don't look bad. I mean, they are dips. I'm okay if they're dips. They may not signal a large move up, but they are dips. Dips. What's going on here? Again, put my cursor here, but I'm looking at the larger 5-minute time frame. And here, we're in this neighborhood here. Need to be able to drag you. That's not right here. Okay, so I did say that the low has got to be under the 9-period moving average. What? That's fairly an aggressive move down though, and maybe that's the problem. Or also right here though, this is just barely over this over this red line. Because remember we said that the black line has to be over the red line, which means it's the fast moving over the slow period moving average of the slope of the 200 period moving average. But this black line is aggressively moving down, so I think we need to say that the 10 period moving average cannot be aggressively moving down. So we'll just say that, and that is of our first data stream, which is data 1. So we'll say that and that first black line is this one here, so that's value 2. So we'll say that value 2 has got to be greater than value 2, greater than equal, or at least greater than 90% of value 2 a bar ago, which just means that the price that the slope, that fast period moving average of the slope, 10 bars can only be coming down, 10% from the bar before it. So let's go, value 2 is greater than value 2 of a bar ago times, say 90%. All right, and then verify that. All right, so we still have that value 2. That is the value 2. Value 2 of value 2 is greater than value 2 of a bar ago times 90%. All right, so that 90% number probably isn't right, and these numbers are so low here. I wonder what that. I don't know. 95%. Let's see what this says. Let's see what this is. We know that we don't want it to be this much of a drop, so let's see, just out of curiosity, what this drop is. This drop is from here to here. How much is that? That's 8%? Is that right? 3%, 5%. So if we went by those numbers alone, so that's a 5% drop. So let's say the past 2 bars, it's got to be greater than 95%. Let's say 94%, just so we'll lose that. 2 bars ago, 90, so 4%, so that'd be 96. So 4 from 100 is 96. All right. Boom. Okay. Okay, so let's see what we're looking like here. So we got that green dot there, which I like that one. Let me make this a little bit bigger so you can see what I see, if you see it as quickly as I do. I don't know how quickly or how easily you see it. That's the wrong one. Let's go here. And this one. Style. point. Make it a lot bigger. Okay, so you see that big dot there? Alright, so now we're gonna go back. Matter of fact, let's make this screen bigger. We'll start at the beginning and see what it looks like. Alright, so nothing yet. Oh, there's one, and a nice move up. There's one. It still continued a little bit of a pullback, but then it had a nice move up. There are a couple. Again, we need to get rid of the after hours ones. So time is less than 15:55, 15:45, because we need to be able to close this out before the market closes. All right, so we're back here. Okay, so we have those two. That's fine. Come back in here. We don't have those after hours there. We don't have pre-market. There we still have this, which is right at that cross. I don't like those. $97%. Which just, like I said, it just means that this isn't really coming down that much. If anything, it should be going up. So I should be saying that it's got to be above above 100% of the 2 bars ago. Now this thing isn't even reacting. Just pretending like I'm not even talking to it. I'll just say it's got to be greater than or equal to value of 2 bars ago. See how you like that. Okay, so I did lose this one that was right in here. Got that one. I mean, again, it's not going to be 100%, so I'll just leave that for now. I'm okay with that. As we keep on, I love that one. That one's great. Those, I mean, don't love them, but they do have move. There is a move up right after them. So, I mean, if you consider, if you're looking for a larger move play, then this might not be it, but this might be great for a scout. That one there too. If you get in at the bottom, at least get it up to the top. I don't know. So I have to keep playing with this strategy, but this one looks good. This one, again, you get it to low, but yeah. Well, this is one that we can keep playing with. But I kind of like this one. Like I said, I've been enjoying working with the slopes down here, so I'm going to continue working with that, or even employ moving averages, looking at moving averages from one time frame to the next. So anyway, didn't come up with anything that's going to be $1 million maker today. Maybe next time. I'm Eric. I'm out. Peace.